Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Uh, so just a crazy week. I don't know how else to describe it. I'm almost at a loss for words. It seems like we go from these periods of just ultralight volume, no volatility, dollar trading ranges on the SPY and the Qs to what we saw the last 4 days, where we had 3 days in a row of 400 to 500 point days. So it's this week was semi predictable in the sense that we knew Wednesday was a Fed day, and it was likely to be a potentially a little bit more volatile. But then Thursday and Friday, well, Thursday specifically, just a huge curveball, and kind of like just it makes you want to just like take like a maybe like a step back, take like a fresh look at things, and because what I talked about in the letter going out Sunday is that it's a change of trend. So we were in a very aggressive trend. Things are now broken, right? So the trend has been busted. Now it's like kind of dealing with the aftermath of that. So in terms of trading, expect higher volatility. In terms of earnings, expect wider ranges, so potentially more volatility strategies, right? Versus bullish bets. Those might be a little bit tougher to get paid on just in the near term until things like repair themselves and improve. All right, so take that all into consideration. Um, as we go into this upcoming week, because it's still like another really busy week of earnings. Yes, maybe not like the high profile mega cap tech, but there are still a lot of names. What you'll see is that of like the themes of the week, it's going to be energy, it's going to be biotech, it's going to be software, and there's going to be some of like the new IPOs. So definitely a ton of things that are going to move. All right. So before the open Monday, not really anything of interest to me at least, but probably have to keep an eye out for tweet storm, right? I mean, it seems like that's really what could move the market the most at this point. So maybe we get like a some sort of Twitter update on Sunday night from Trump. So you got to keep an eye out for that. Anyway, after the close Monday, Continental. So this will be one of like the first EMP names of this coming week to report. Obviously, this past week was just a unusual week for the EMP names, just because Concho, CXO, and Whiting just got absolutely decimated, and it really rocked a lot of the EMP names, especially like the mid small cap names with a lot of high leverage. So they're looking for about 2.5 points on CLR, and I feel like I wasn't really interested in this coming into the quarter. Um, just wasn't one of those names that I thought was going to be really in play around earnings, but now more so. Just technically, it's hanging around a key area down at 35. Some of its peers got absolutely demolished. It seems like it could still have room lower, could rebound higher, and there's going to be multiple other EMP names reporting that week. So it's like it's going to be like the start of like kind of a busy stretch for the group over the next 5, 6, 7 days. So figure maybe it's worth a look just for that reason alone, where sector volatility is a lot higher right now. Chart wise, it looks like it could threaten like a pretty substantial breakdown, or could be a surprise to the upside. So probably worth it for that reason. Probably look at CLR. Take two, another one. So they're pricing in about 10 points. Easily been the best gaming stock, better than EA and Activision. Both are starting to move high. I mean, all three are starting to move higher, but this has been the best of the bunch since April. Just a really tight trend, really aggressive trend higher. You figure EA had solid numbers. Take Two's been the leader. You're probably thinking solid numbers too. Only issue to me is that the options seem kind of expensive just based off its recent average move. So you either have to get the risk down, or Activision, which I'll talk about in a couple minutes, reports later in the week. And actually, it seems like a little bit more interesting of a setup. Also, Monday after the close, Shake Shack. So 6.5 points is what they're looking for here. It's been on a really nice run, and last quarter was strong, but you can see it had a really huge green to red reversal, and it took a while to like recover from that. Um, but it has recovered. It's at the high, flagging. Restaurant stocks are still pretty hot. But the problem is like this just really hasn't been as volatile as it once was, and I feel like I would lean bullish here, but it's just it's been kind of hard to get paid on the options on this one. It really hasn't worked well on earnings like the last few quarters. So the options aren't cheap. Hasn't really rewarded options, and it's just been like a less volatile name. So I would maybe lean more speculative bullish, but also at the same time might just wait and see what they say and then try to trade on it. Tuesday before the open, a couple bios. So Alnylam, 16.5 points. Is what's priced in here. Um, it's maybe not a household name, but year to date, it's had a couple good moves when it's given numbers because it's in the middle or I guess at the start of like a kind of a critical drug launch to the company. So it tends to respond um, pretty strongly, or it tends to react pretty strongly to those numbers when they come out. So this quarter, they're looking at 6.5 points. Technically, it doesn't look great one or the other, but it's averaged closer to like 8.5 to 9, like the two times it's given sales updates this year. So just from like an option pricing perspective, it's kind of interesting. Also, Regeneron, $20 is what they're looking for in this one. It's more interesting technically, but it hasn't been as consistent of a mover when it's reported. So what's interesting this time around is just that it's flagging right at this really key 300 area, real big level on it. You can see here, right, going way back. So just been in like a pretty tight flag down here. Red hasn't gone anywhere. Coming off a pretty ugly quarter in May, actually, and it's going to need a pretty good print because another one of those, and it could really like set up a significant breakdown. I will say bios have been better though. Like the bigger cap bios have been better this quarter. So this is one that seems like it could have possibly like 30 points either way, like either a pent up breakdown or like a move maybe up to like the 100-day above. So if it's priced in 20, could have potentially 30. So that's one to take a look at. After the close Tuesday, you have Diamondback, so FANG, just pricing in 7.5. You have Devon, which is pricing in about $1.85 or so, and you have PXD, which is about 9. So again, it's kind of a big E&P week. It's a big E&P morning on Tuesday. On Tuesday after the close, big E&P night. I'd say like of those three, Diamondback maybe is the most interesting just because it tends to be a pretty consistent mover and it's held in better than the others. So it seems like it's kind of like leading, or I mean not leading in the sense that it's like running higher, but leading in the sense that oh excuse me, leading in the sense that it's hung in a lot better. Right? It's not down at its December low, whereas some of these other names are kind of working their way down there. So I think this is one. It's pricing in 7.5. I think it's one where, I mean, if you're going to look at either of those three, like this might be the one where you focus on. But again, I think like CLR just kind of kicks things off on Monday. Maybe the most interesting of the bunch from my perspective. Match. This is Tuesday after the close. $8.5 is what they're looking for. Coming off a strong quarter in a strong uptrend. Chart looks bullish, right? You get the picture here. The only problem is the options are kind of pricey at 8.5. That's close to the top of what it's moved over the last few quarters. So whenever expectations are kind of high, performance is high, and option pricing is high, probably is an avoid for me. Or if interested, maybe like a calendar spread, something to like get the near-term risk down in favor of like a longer-term position. Disney, also a big name. Actually, one of the bigger names of the week. This is Tuesday after the close. 5.5 points is what they're looking for. Their movies have been killing it, right? They just opened Star Wars Park. Last quarter was strong. But it's probably going to depend on the overall market because this has turned into kind of like a Momo name a little bit. And so if the market's real weak still, I don't know if they're really going to chase this thing higher. But if we stabilize or potentially bounce, and Disney beats. I feel like this thing could be into the 150s, but that's definitely one of the biggest names of the week. Win. So $10 is what they're looking for on Win. It just had a really nasty drop. It responds to like those China tariffs pretty sharply. And LVS, so its peer, just had a really lousy report too. So that's not helping. I feel like this is a little bit tougher of a setup, just because you had like the really fast move lower, and LVS's numbers are pretty bad. So it's kind of tough to gauge where expectations are here. And you kind of throw in the fact that any China news is probably going to weigh on this or continue to weigh on this. So overall, probably just an avoid. Wednesday before the open, we have CVS. So 3.25 is what they're looking for option wise, and that actually looks a little underpriced to me. Um, it's been a consistent 3+ point mover the last couple quarters. It had this big pop, right? That was it jumped with other like PBM names like UNH, Cigna. Um, but it's retraced all of that, and now it's kind of back into this key 55 area, and it just seems like it's due for a move. I mean, it's got $5 higher, right? It's got possibly 4 to 5 lower. It's priced in 3.25. It's moved over 3 the last couple quarters, so I feel like the options might be underpriced. Might, if anything, lean a little bit more bullish, just because last quarter wasn't too bad, and the sector is acting a little bit better. So that's what I'm thinking on CBS. CYBR, 11.5 points is what they're looking for. Definitely a top cyber software name. I haven't traded this in a while. It was one I was trading for a little while, but I haven't traded it recently. Um, it fits that trending stock formula. It's like it's had great numbers recently. It's in a real aggressive trend. I mean, like the nice thing is that it has rolled off its high, but it that hasn't necessarily translated to these things like ripping back up. But I mean, if it keeps rolling, if it drops maybe into like the 120s ahead of earnings, then maybe you can get like a sharp snapback if the numbers are really good. So it could be interesting if it keeps falling ahead of earnings, because I mean, I feel like my bias probably leans to the upside on this. ICPT. So here's another bio, just brutal chart, which actually is what makes it interesting. 5 points is what's priced in. It really seems like a make or break quarter for Intercept just based off the performance. It's really heavily shorted underneath all critical support, and it doesn't really have any key support probably until like 50. So it's about 11 to 12 points lower. Obviously, has like a ton of space higher, and it's heavily shorted, so there could be a really vicious squeeze if it's good. They do have a drug on the market, so earnings and revenues matter here. So that's definitely one I'll be keeping an eye on. Wednesday after the close, booking. So point wise, this should be the biggest mover of the week. 115 is what's expected. Expedia's numbers weren't bad, but the stock really didn't move much. Bookings coming off a decent quarter here, but it's also closer to like the top of its range, and the thing with booking is that it often kind of struggles to put back-to-back good quarters together, and with options kind of like closer to the top end of what it normally moves, it just seems like a tougher setup. Um, Plus, it's not. I feel like it's just one of those names where I just don't often have success with it. So, probably going to be an avoid for me personally. Lyft. So this will be the first of the ride sharing names. Probably later in the week. 6 points is what they're looking for at Lyft. Our options just expired on this thing after a really long swing we held. Obviously, holding that swing for a while and watching the stock, I've realized that this is just really struggling to turn the corner. I mean, it's off the lows, but it just absolutely could not turn the corner. Had multiple runs, couldn't really bust up into like the 70s again. It's rolling over now. Didn't act great on the last time I reported. Stock doesn't act great technically. I feel like sets up for like a bearish bet, and maybe something speculative on the downside. Mercado Libre. This might rival Brooklyn for the biggest point move of the week. Um, they're pricing in 80, and man, I wish that we still had that trade on from February. So once it finally broke out in February, this thing has just been an absolute monster. And last quarter was up like another. Last quarter was up 100. Continue to go higher since then. Um, Options are just very, very, very expensive. The stock has had a huge run. Expectations are sky high. It's just not something that's in my wheelhouse. So I'm most likely going to be avoiding this thing. Roku. He'll be an interesting one. 16 points is what's expected. It's definitely going to be one of the bigger prints of the week, even though maybe market cap wise not the biggest name. Because this is certainly a Momo name. It's up 50% since it last reported, and it obviously had a really strong quarter then. Had a strong, I mean, it's basically had strong quarters this year across the board. But with strong quarters and huge performance means expectations get a lot higher. I feel like it's probably likely to be good, so I lean bullish. But considering the overall environment and the run it's had, probably wouldn't be surprised to see a more muted move than the 16 they're expecting there. So I kind of like the idea of like a calendar spread or maybe like a tighter call spread, something like within like that 16-point priced in band. Stamps.com. Look at the chart of this thing. Real beauty. 8.5 points is what they're pricing in this time. And those options are way underpriced the last 2 quarters. But at the same time, I mean, it's only a $45 stock versus a $200 stock. So my gut on this says expectations are probably very washed out and it could move higher. But that's not something I have a lot of conviction on. I feel like it could see more than 8.5 points. I don't know which way to lean, so I might watch like the option flow and see if there's a little bit of a tell on it. Just after the last 2 quarters, I feel like 10's not totally unreasonable. So maybe not a whole ton of room on top of what's priced in, but still could be some room. Zillow. All right, so Zillow is also another one of those names that's had a huge run since I last reported, over 40%. It's priced in 575-ish this quarter, and it's just kind of flagging underneath 50. So what you can see when I scroll out a little bit is that it has like a really well-defined gap above, right? And it's had a huge move since last quarter, and it's actually still pretty heavily shorted. So the options on this, to me, actually seem pretty underpriced, just because you have like a pretty clear eight to 10 point move higher depending on where it is going in above 50, and then it's well off it's well off its low. It's well off from where it was when it last reported. It's had some really big moves on earnings recently, so that's one where I feel like the options on just either way are just seem underpriced. Thursday before the open, Kraft Heinz. So this one is one I've been waiting on. So 275 is what they're pricing in. They finally confirmed that they're going to be releasing results. They haven't since February when the stock cratered. So 6 months on, finally going to get an update, and I feel like it should be a really big mover because nobody really knows what to expect here. Obviously, last quarter was a complete mess, but Kellogg was just good. So maybe that's a little bit of a tell. Maybe. But this thing has been in a real tight range, and I feel like it's due. And 275 really doesn't seem too bad, considering, I mean, it moved 15 last quarter, and nobody knows what to expect, and this thing hasn't done anything for months. So that's definitely one to keep on your radar. Lumentum. So we'll see how the chip stocks are next week, because they've obviously been in the news a lot. They've been flying around everywhere. This is priced in at about 475, and if it has like another big move lower, it might present a little bit of an opportunity, or maybe even like a big rebound maybe presents an opportunity. I don't trade this one too often, but I feel like what's priced in and what this stock has done in the past isn't too bad. I guess it's really going to be like my opinion on it's going to probably be affected by where it is at the time and what the sector, what the chips are doing at the time too. So just kind of have to like wait this one out. But it's something I have on my radar. It's not necessarily something I would play, but I'll see where it is like next Thursday, next Wednesday, going into earnings, and maybe make a judgment call. Okay. After the close Thursday, you got some interesting ones too. Activision. So, like I mentioned before, Take Two's earlier in the week, Activision later. Activision definitely seems like the more interesting setup to me. I mean, just this really obvious long-term channel that it's working on breaking out. 375 is what's priced in. The issue with this is that if Take Two's good, it might actually lift Activision prior. So this could theoretically have a pretty big move prior to when it reports, just because you have Take Two reporting. Because then if Take Two's good, then you'll have EA that was good. Take Two is good, probably runs ahead of its own report, but then expectations might get a little bit higher. So a lot of moving parts prior to when Activision reports, but I mean overall this does seem like one of like the cleanest setups, one of the more explosive setups of the week. Appian. So this might not be one you're familiar with, but smaller cap software name, couple-year-old IPO, priced in 5 points, and it's kind of bumping up into like this really huge 40 resistance level, which you can see here. So it's hit it, failed a few times, but it could be a pretty nice pent-up move higher if it finally does break above it. Software off their highs, but still the sector is one of the best. So, a newer-ish IPO kind of bumping up to a critical area of resistance. Could be a pretty big pent-up move if they really deliver. Speaking of newer software IPOs, Dropbox. This is also Thursday after the close. $2 is what's expected, and I feel like the options look underpriced on this one. I mean, it broke this channel, right? It finally broke this channel here. Finally broke the channel. Yes, it has rolled back down, but it's still, it's still within striking distance of like the moving averages here. It's been a fairly consistent mover too when they've reported. It's not always a huge mover, but it's pretty consistent. And I feel like this quarter just has like a better recipe that the volatility or the range expanded as it broke the downtrend. Volatility might be a little bit higher because of that. At 2 points, options aren't too outrageous, so it could be one to keep an eye on too. Overstock. So 3.5 is what's expected. This isn't really an earnings story, but the stock has been just on fire over the last like month and a half. So it just looks more interesting from that perspective that the stock has really rocketed higher, bumped into like this kind of like this monthly resistance range. It's one of those names where it like earnings don't necessarily move it, but if they're enough to possibly put it at like 23 to 24, then that could really trigger like a huge run above that into like the mid to high 20s. So earnings maybe not so much of a catalyst, but if they move it just enough, it could really trigger a bigger move. So it needs a few things to fall into place, but that could be something to keep an eye on. Trade desk. All right, so they're looking for about 38 to 40 points here, and I mean, I would expect the numbers to probably pretty solid. The problem is that it was smacked really hard after solid numbers back in May. So, stock is not at its absolute high, but it's close to its high. It's had a huge run. Expectations are high. Option pricing is high. Got hit after a good report last quarter. I mean, you see like the picture here. I like trading this name, but not so much into earnings right now. So I think I'd probably just prefer to wait it out, see if there's a pullback, and then maybe try for like a swing trade. All right, and last but not least, Uber. So 3.25 is the priced in move, and things have really started to take a turn south here. It wasn't screaming higher, but it was holding in pretty well. It was kind of right underneath this 45 IPO high. It had a couple false runs. It wasn't ripping, but it also wasn't breaking down. Now it's starting to turn south. and it's near 40. Um, you know, the thing is, like last quarter, the earnings weren't much of a catalyst, and Lyft might actually move Uber prior to Uber's own report later in the week. So, gonna have to kind of see where it stands Thursday going into its own report. Um, I still can't get over the long term potential here because like I feel like if it finally does wake up and go, like people will really pile into it. But just in the near term, like the chart really doesn't look great. And last quarter wasn't a huge catalyst. Lyft, I guess I'm leaning more negative on it, and that might like further pressure Uber. So we're gonna have to make like a judgment call after Lyft, see what Uber looks like after Lyft, and then figure out what to do with Uber then. All right. And then so Friday before the open, really nothing of interest to me. No major names. So Thursday is really going to be it. All right. So again, earnings don't happen in a vacuum. So as much as some of these setups look good, or maybe they don't look good right now, a lot could change over the next few days because I mean, when you have like $4 to $5 moves in the market on a daily basis, a lot can change really quickly. So the strong trending stuff seems to be breaking a little bit. Got to take that into account. If the volatility is going to be higher, then that should translate to maybe some better two-way action on some of these reports. So maybe focus a little bit more on the volatility strategies. All right, but changing market is going to change what works in these earnings. So you're just going to have to adapt with it. All right, guys. Hope you have a fantastic weekend. All right. And on a programming note, our option session will be this Tuesday, not this Monday. All right. So I mentioned it yesterday. I'll try to keep mentioning it prior to that, but it'll be this Tuesday at 4:30 after the close. Right, not this Monday. So again, have a wonderful weekend, and I'll talk to you guys all on Monday.